You're tuned in to Agriculture Today, and we start our Friday show with a grain market outlook from K State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. Daniel, Guy, thank you both so much for taking the time to join us today.
Thank you very much, Shelby.
As we're looking at the markets today, starting off with corn, looking internationally and domestically. And Dan, what are we seeing domestically?
Well, of course, we followed the report that was released by the USDA for crop production and World Ag Supply Demand estimates on Tuesday, the 12th. And it's a report that lays the foundation for domestic grain markets really for the rest of the calendar year. And we'll be reacting to these numbers on a month by month basis from in the September report, September, October, November, and then after skipping a month, we'll still have a WASDE report, but the final production numbers will come out in January. And if you look at the changes that happened coming out of this report, there were two things. I think that what caught the headlines were the changes in yield. And again, these and that number was 188.8 bushels per acre, had been estimated to be in the July report a trend line yield at 181 bushels an acre, so up 7.8 bushels. So that in itself would have brought about quite a bit of change. But also kind of underlying that yield headline is that there was a sharp increase of about over 2 million acres in corn planted, estimated in this report, up to 97.254 million acres. Harvested acres up about 1.92 million acres, up to 88.690. So the combination of those two things together brought about an increase of basically a billion bushels in U.S. corn production, up to 16.742 billion bushels, up from about 15.7 there in July. The rest of the balance sheet actually there's quite a bit of change in essence, because with that large supply number and generally lower prices, by the way, and with USDA lowered their price forecast from $4.20 for this 25-26 marketing year starting September 1, just around the corner, raised that. They lowered that from $4.20 coming out in July now to below $4, down to $3.90. So, and with that, a lot of changes. Most of them, almost all of them, spurred on by the idea of lower. We'll have a buyer's market for corn with these large supplies. So you're looking at feed residual use up 250 million bushels. Wet corn milling up 95 million bushels. Total exports up 200 million bushels. And total use up now to for U.S. corn up to just under 16 billion bushels. So a sea change literally in the domestic supply demand balance mode. I would say overall that we want to keep in mind that this is still the August number. It's based on what farmers anticipate they'll have out in the field. The USDA itself will not get out into the field and start measuring things until around September 1st. By that time, we'll have that much more information beyond August 1st, and we'll see if there's any change in sentiment once we get there. I wouldn't be surprised. This could be towards the high side of yields for this year. We'll see as we get out and deal with the ongoing windstorms and rust and whatever else is being talked about. But anyway, this set a strong mark, by far record corn production in the U.S. and then set the stage for however the international markets for corn might view things. So, Guy, I guess I'd throw it over to you for the international side.
Yeah, just a couple comments on the domestic side. I mean, the trade was expecting a larger corn production crop, but that number the USDA came out with, that was the biggest single month increase since 1988. And just the quantum of that number is what really surprised that market, and it's weighing across the whole commodity complex on that. So quite a change. The other thing was the significant jump we saw in the ending stocks to use ratio from 10.8 last month to 13.3 this month for U.S. ending stocks of corn. And that's just all very, very bearish. Hence, wearing my Chicago Bears hat today when we're talking about corn and wheat. On the global situation, again, just to emphasize, we're looking at a record corn production globally. 1,289,000,000 metric tons of corn, which is a fairly significant new record. The corn situation, I was hoping to be a bit tight, but look, we've had good weather all over the world, not just in the U.S. to bring that corn number up. Just looking at the export situation, or before we go to export, just to comment on feeding. It looks like we're seeing less wheat being fed in a number of markets around the world, particularly China. I think they're going to consume more of that wheat that they produce domestically rather than put it into the feed ration. On the importers,
And that's for corn, right?
Increase.
You're looking at corn or wheat there, Guy?
Corn.
Okay.
They're going to feed less wheat, consume more corn.
Okay.
Looking at major import forecasts, China imports, corn imports, that said, for this past year were reduced 1 to 4 million metric tons, and we'll looking at about 10 million metric tons for this coming year, which I think is maybe a bit optimistic. Other importers for the new crop: Egypt up 1 million metric tons, EU up 1.5. The Southeast Asia up slightly, just 100,000 tons, while Canada's been reduced 200,000 metric tons. So not too much changes in that export, and I think the exports we're seeing there for U.S. exports are fairly achievable from what the USDA showing, and I would be maybe a bit more optimistic on our export program for the coming marketing year.
But for the year,
Daniel,
I would add in on the corn balance sheet, yeah, that we are now projecting a record high U.S. corn export figure of 2.875 billion bushels, and and over 2.11 billion bushels in ending stock. So we're over 2 billion bushels with this. I guess I would say overall, we just want to remember that there's kind of a pattern in the grain markets when we're focused on supplies that we tend to see price lows. It tends to be put in any more in August or September, and after that, I guess the uncertainty about production tends to go away. Then we start looking at usage, and we'll see where things go after that.
One thing I'll bring to the table is the old adage, big crops get bigger. And so far, we're seeing this year's crop make significant optimistic changes, and I would tend to expect that to maybe follow through for the rest of the marketing year. So we'll see in the next 30 to 60 days when they get out in the field what that crop's actually coming off as.
Yeah, let's see.
what are we seeing for grain sorghum domestically?
There was a change in the grain sorghum acreage also, in that from the July in July there's a forecast of 6.2 million acres of sorghum, and ended up at 6.6 here in the August report, and harvested acre. So that's up about 400, little over 400,000 acres, about 340,000 acres more harvested. The yield slightly higher, but the overall production number up about 25 million bushels, up to 391. It's noteworthy that there was no change made in the exports for grain sorghum, and of course that's a little bit of a political football given U.S.-China trade negotiations going on, et cetera. So we'll see. So although the exports didn't change in this report, I'd be curious to see what the prospects for exports would be in future reports when we have more surety with regard to U.S. and China.
On that export number, Dan, USDA's got it in there at 5.4 million metric tons. That's over twice what it was this past marketing year.
I'm talking about a U.S. grain sorghum, Guy.
Oh yeah, grain sorghum. Sorry,
yeah. U.S. grain sorghum, 225 million bushels.
Yeah, I'm talking metric tons.
Yeah.
So it's unchanged for the month. The biggest difference in that export matrix will be a lot of that sorghum's now going to Mexico. It's not pricing into China, so a big
Yeah.
change in
Yep.
that trade flow, and it's competing into a number of extra markets now rather than to China. So we've seen to made a shift in the trade flows a bit. It would be nice to see that China situation get settled and in such a way that would make U.S. commodities competitive again back in there.
So we'll have to
And
see. There's lot of geopolitical things going on. Go ahead, Shelby.
Just a few.
as we round out our first segment, Guy, what are we seeing for freight?
Uh, the freight market situation is we're seeing a little firmer on global freight markets. The dry bulk index is up this past week to about an 18-month high at just above $2,000. No, not a huge rally, but it's good to see a bit of strength in there. I think most of that is actually being driven by the demand for coal and iron ore, particularly at the moment, which is sort of indicating maybe a bit of a recovery in China and Southeast Asia's economies. That's the big driver, that dry bulk freight market. Uh, as those freight rates do go higher, though, it does make the U.S. a little less competitive, where we're freight disadvantaged, particularly into those markets in Southeast Asia and some other places, as we got to compete, particularly with Australia on the wheat situation and into Brazil for some markets there as well. So we're seeing some firmness there, which I think that's a good leading indicator of better economic strength coming globally.
That was the senior economist at the IGP Institute at K State, Guy Allen, and he was joined by K State grain economist Daniel O'Brien. We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Guy and Daniel as we continue our grain market conversation.